Crypto presents exciting new opportunities for the investment-minded, but it's also volatile and accelerating in complexity. That's why we created Token Metrics, an intelligent crypto platform backed by an industry-leading combination of data, AI, and media that feeds optimized portfolios to crypto investors. Featuring Token Metrics ratings to help you find the best investment opportunities in real time, an indices page that showcases various model portfolios, and deep insights into price predictions and technical analysis. A dedicated NFT dashboard that evaluates NFT collections and assets by our machine learning algorithm to find the most profitable and secure NFTs across all available blockchains. Plus, with access to Token Metrics TV, monitor 24/7 exclusive crypto news and analysis. Whether you're a first-time trader or a seasoned crypto investor, you can stay informed and in control, backed by your all-in-one crypto companion, Token Metrics. Take control of crypto today at...
Hello, everybody. Welcome to Token Metrics Live. Man, what a week. What a week. As the crypto bear market back, stay tuned. We're going to cover it. This is going to be more of a special episode where we'll cover a lot of news. There's been a lot of regulation news and a lot of macro news. Silvergate Bank, Silicon Valley Bank, Ethereum potentially a security, XRP. Stay tuned. But any questions you have, post them in the chat, and we'll get to them via the AMA at the end. But let's see who's here on the stream. All right, first up, Steven says, get Hivemapper Dashcam. All right, you have your Dashcam. That's awesome. Drive to earn. Hey, we're in a bear market right now. Driving to earn sounds good with me. Dore says, hello, good to be here. Great to have you here as well. We got Shaq in the house. Analyst Shaq says, let's go, Ian. Bear market is back time. Time to look for those hidden gems. Yes, it is. Not Bill, this is Ian. Steven says 10% off. Hey, what's up, Clay? Nidia, what's up? He says, nope, I'm out. Hey, sometimes the best finds, the best investments are in the bear market. So I would not necessarily go away, but I would be preserving capital, be on the sidelines, but still be keeping pace on the market. But sometimes you have to know when to get in and get out. That's why we have our free market indicator, which actually hopefully save people money without even having to be a customer from getting out of the market. I know for us on the fund side, we've basically been mainly in cash. We're still actively investing, but once we changed from being bullish to bearish, it was risk off. It was time to de-risk and slowly get out of the market. And Nim Fufu says, need a pump. Evan says, Hivemapper is 3 cents, bro. It is? Okay, I've not been keeping tabs on it. The FTV was very, very high. Hopefully it's come back down to earth. Because I said target FTV was under 50 million, but we'll check that out as well. All right, so let's hop straight into it. Let's first begin with a quick market update. All right, so this is the page. You can go to app.tokenmetrics.com/market. This is a free page we give to the community as a way to tell you when it's risk on or risk off. So for instance, our indicator turned bearish on Feb 25th when the total crypto market cap was 1.1 trillion. Now it is 965 billion, as we see here. So basically, it gave you about 2 weeks notice to get out of the market. And as we see here, I mean, the gauge was in the past was as high as 80%, but now it is down to 24%. So we're back in a bearish environment. And looking at this, most coins on the platform are in red, right? Meaning that they're bearish. So now is the time to really not be in the market based on this data. And specifically, if we go to our Bitcoin versus altcoin season chart, we see that beginning of the year, it was very bullish, right? We basically Bitcoin season turned around. We went all the way to this white space, almost came to altcoin season, but didn't go quite to altcoin season, then got rejected, right? We tried once, tried twice, tried 3 times, got rejected, and boom, they came back down, and now we've crossed back into Bitcoin season. So basically, most of the returns, as we see here, right, this is basically telling you most of the returns are right now in Bitcoin, not in alts. So alt season is not where it's at. It's time to be bearish. And if we go down here, I mean, look at this. The average sector grade, right? The highest is 16%. When we were in this white space, almost everything, I'm sorry, over here, almost everything was over 80%. So it is very, very bearish right now. So, I mean, honestly, time to be on the sidelines and risk off. Now's not the time to be a degen. And if we come down here to top performers, surprisingly, we've got Huobi token. Looks like that's kind of bouncing back. Not sure why. I guess just in sun and people buying it up. LDL and DYDX. Voyager is down 12%, which is kind of interesting because Binance US, I believe, bought Voyager, but then recently regulators came in and appealed. But so there's lots of back and forth with that. But that's the way I'm looking at the market. If you want to get actual ratings in terms of cryptocurrencies based on our data and AI for both long-term and trading, go to tokenmetrics.com. We have 1 week free trial. You can go there, check it out, and get actual ratings on different tokens. So for instance, some tokens I want to pull up briefly just based on people's interest. We've got XRP, right? So on the investor grade, it's surprisingly still a buy, according to this, right? Based on the quantitative data and AI. But on the trading side, right now it is down 30% in the last 24 hours in terms of trader grade. You can check it out, our indicators here. This turned bearish on Feb 13th. And this is basically the trading indicator signal. But right now, I would not follow this signal just based on the market, and certainty ratio is pretty low. But that's one token. We'll cover XRP. Actually, speaking of XRP, maybe it's kind of segue to that because I know people love XRP. So one of this crypto lawyer I follow on Twitter and YouTube, Jeremy Hogan, makes great content, posted this earlier this week, basically saying Ripple just filed a strong case supporting its fair notice defense. Right, strong because it comes from the U.S. Supreme Court and states that regular-ish people like you and me, myself included, need to have guidance and know what the law and rules are before being sued. Why is this important? So he's basically quoting this other lawyer, James K. Phelan. I'm not sure if I'm saying that right, but basically, if we pull this up here, Ripple is basically using a Supreme Court judgment, or let me pull this up here real quick. And they're basically saying that, according to the Supreme Court case, they didn't have fair notice. So very, very interesting. Anybody out there who's following this SEC XRP lawsuit, let me know what you think down below. But I mean, first of all, where do you have bear markets we're dealing with in crypto? Where do you have hacks, scams we're dealing with in crypto? And companies going bankrupt. Now what's having to do with regulators and banks? I mean, this has been quite the downturn, quite the bear market. But definitely tell me what you think about this if you're in XRP. Speaking of regulators, let's go to KuCoin actually. So this is a story from CoinDesk. New York Attorney General alleges that Ethereum, ETH, is a security in a KuCoin lawsuit. I mean, this is ridiculous. But I mean, obviously people know KuCoin as the exchange that is known for having lots of altcoins and for not being too strict with letting anybody trade on the platform. But now you have the New York Attorney General suing KuCoin, and in that lawsuit alleging that Ethereum is a security. Now, if you take this plus all the stuff Gary Gensler of the SEC has been talking about in different articles, I think The Hill and others, basically these guys think that Bitcoin is the only cryptocurrency out there that's not a security, and everything else is a security. Now, some people have been talking about this, especially when Ethereum changed to ETH 2.0 with Ethereum staking. But the way I kind of view it, the way I view this myself is, at this point, we have to stop asking for permission. Because we've been waiting for two cycles now for clarity on regulation around crypto and crypto assets. It's not happening. If anything, it's getting worse post FTX. But if we're waiting for this to happen in the US, eventually innovation gets stifled. So now we have to just go overseas, and products are going overseas. Developers are going overseas. We have to go to places that love crypto, that appreciate crypto, and tolerate crypto. So the hubs we're seeing now, places like Dubai, where they've passed crypto regulation. So, I mean, if regulators want to hinder innovation here in the US, at this point, I think it's becoming a moot point. I don't think it really makes any sense. I think we have to get them out of office. I believe that it will be great if we can have some kind of crypto lobby. I know some people have been talking about this. One of the founders of Masari has been talking about this. But I think if we can vote with our pocketbooks and get all these American politicians out of office, that would be great. All right, so that's that. But now let's go to the big news of the day. I mean, holy cow. Okay, so this comes straight from the government. FDIC.gov. FDIC creates a deposit insurance National Bank of Santa Clara to protect insured depositors of Silicon Valley Bank. I mean, this is ridiculous, right? Without reading the whole thing, they're basically this Twitter channel I follow, Unusual Well, says breaking: Silicon Valley Bank has been closed by regulators, which are now in charge of the bank's deposits, according to a release sent out by the FDIC. Now, why this is huge is Silicon Valley Bank was the fifth largest bank in the U.S. Last time I checked this week. So the fifth largest bank in the U.S. went belly under, is closed. This is a few days, I mean, basically 1 or 2 days after Silvergate Bank also shut down, right? This is a press release they put out on March 8th. Silvergate Capital Corporation announces intent to wind down operations and voluntarily liquidate Silvergate Bank. So Silvergate Bank was the biggest crypto bank out there. Like all the major exchanges were using Silvergate as their bank. Coinbase, Binance, Kraken, and you kind of saw this brewing. We talked about this even last year in Q4, post FTX, FTX Alameda, because they had FTX and Alameda were using Silvergate Bank for their banking. So that was so they took an L on that, and I think that affected everything. But there's some good threads I found on Twitter. I want to bring up here real quick. Right, so here's one. This is Balaji, former CTO of Coinbase, basically saying that if I'm reading this right, that means that any entity that still has money on SVB now has to go through a bankruptcy claims process for over 250K. What does that mean? So let's say you had $1 million in the bank. The FDIC only insures 250K. Anything more than that, you're out of luck. So this is why, in a way, crypto is great because you get to actually hold your own funds, not your keys, not your coins. But now, I mean, banks are actually going bust. We had 2 banks go bust this week. I mean, that is huge news. I mean, this affects crypto deeply because Silicon Valley Bank was the main premier bank for VC-backed companies. And lots of Web3 companies backed by VCs like A16Z, Multichain, and others were using SVB. As I mentioned before, this was the 15th biggest bank in the US, has gone bust. I mean, this is pretty crazy. Then this other person I follow on Twitter, Genevieve Roche Vector, kind of has this thread breaking down what's happening, right? So I'm going to try to read through this at a high level. So basically, Silicon Valley Bank just failed. Will contagion spread across the financial system? Let's take a deep dive. Right. So on Thursday, SVB Bank crashed 60%. The stock price went down 60% as the bank scrambles to shore up liquidity. On Friday, it fails. FDIC comes in and basically takes it over. So it's been a horrible week for banks. Then basically all this is happening based on their bond portfolios. Right. So my understanding of this, I'm not a finance person, I'm a crypto investor, or a bonds person. But basically, from understanding this or this thread and other articles, these banks basically have been affected by interest rates to a point where they had to sell their mortgage-backed securities and bond portfolio at a discount. Right, so they took a $1.8 billion loss on the sale of this, and basically people began taking funds out. So actually, let me actually pull up a different article I want to share real quick. Just give me 1 second here. So basically, like we had crypto VCs telling their startups to take funds out of Silicon Valley Bank. This caused a bank run. And because these banks so basically they'll take your deposits, and as banks do, fractional reserve banking, they're doing funny stuff, funny business with your assets, with your deposits. But they have, so let's say a bank takes $1 billion in deposits. I want to make this simple. My understanding is they take this $1 billion in deposits. They buy mortgage-backed securities, trying to earn yield, trying to earn interest, kind of like yield farming, except with banks, on your money, on the deposits. But if there's a bank run, right, they have to people give people their funds back, their deposits back, which causes them to have to become forced sellers of those bonds or those mortgage-backed securities that they're earning yield on. But if there's a large enough bank run on the bank and they are forced to sell and they sell at a loss, that's the issue these banks are having, right? So here, crypto VCs basically are telling companies to pull out. This was before they shut down. Then you also had I think there was one also from Peter Thiel, famous founder of PayPal, and also a big VC, also pro crypto, telling his startups to pull funds out of their banks. So I mean, this is definitely not good for the space, not good for the ecosystem. Yeah, so this is a good article from M. Cryptodamus, kind of explaining the same thing with SI. Let me kind of skip this, right? So basically, he says, an example: you put $100 into an account on Silvergate Bank. They take $100 and buy $100 in treasury bills at 1%, right? Let's skip this real quick. Yeah, so the problem is as the Fed increases interest rates, and it has, people don't want the treasury bills anymore because they can earn more interest rate directly from the Feds. So they can either wait until these bills become mature or sell them at a discount. And that's what's happening. These banks are selling at a discount, losing money, losing a lot more money than they have in revenue. Right? So for example, here it says that all of a sudden people wanted their money back. This is post FTX implosion, and they had to sell their 1% treasury bills on the bond market. They got completely wrecked, losing $1 billion in a month. That was all their profits back to 2014. So since 2014, they lost all their profits in 1 month because they had to take a huge L because of this bank run. Right? People and customers didn't want to have their funds at risk on these banks. So definitely crazy news here. But let me check in with the comments and see how we're doing here. Tell me what you guys. Let me know what you guys think here. Question from Mac Baby. Take the name here. Is 500 Solana tokens good enough for the next go run? $500 prediction. Thoughts? I work 95 jobs, so not a whale. Thoughts on Olive 200x. Lots of questions here, but basically, me personally, I'm bullish on Solana. I think it's undervalued. I would definitely leverage Tokenmetrics platform to see the investor grade, but from a fundamental perspective, Solana is undervalued. The price has been crashing. I think it's the next Ethereum. It showed that last market cycle. Before, I was kind of hesitant based on FTX Alameda, but now that they're crashed, and now you have the phone coming out, the Saga phone, I believe it's called. But basically, their crypto first phone, plus Helium Mobile. Helium is switching to Sol, to their blockchain on the 27th of this month. So I think next month could be a huge catalyst month for both Solana and Helium. More so on Solana, the blockchain, the L1, but I'm watching that. I mean, I have some Sol, my fund has some Sol. I think if there's any project that can bounce back in a bear market and go back to all-time highs next cycle, I think Sol has that. They have a lot of capital, and I think the phone, if they execute on their phone, that's a 0 to 1 technology improvement. The same because anybody who's read 0 to 1 by Peter Thiel, great book, one of the best books I've read for any entrepreneur out there. 0 to 1 is how you have a huge technology shift. For example, OpenAI was a 0 to 1 improvement where it's binary. It's 10 times more impressive than anything out there before in the past. That's 0 to 1, right? That causes people to come back and invest in technology or in crypto, right? So the 0 to 1 improvements in tech, I'm sorry, in crypto and Web3, I think have been DeFi. DeFi is summer, right? DeFi 1.0. Basically, you had like yield farming, you had Compound Year, and all these projects. Then you had Uniswap, right? Uniswap V2 and V3. But I'll say Uniswap V2, basically AMMs. That was a 0 to 1 improvement. It caused basically DeFi to thrive. Then you had NFTs. I would say NFTs, especially Bored Apes, you had those big wins. So if we're now, then we had DeFi 2 with Olympus DAO. Now it ended up being a Ponzi, but hindsight 2020. But the technology, right, caused a whole new bull market. in a way. Now, what could be the next catalyst for bull run? It has to be something that's 10 times better. That's 0 to 1 improvement. And I think a crypto first phone, especially the challenges projects are having, such as Uniswap with their mobile app not being approved by Apple. If we can have our own phone that's crypto first with a Helium device or Helium wireless service that's also crypto first, that could be a huge catalyst. Obviously, very risky in a climate like this. It is risk off, but I think it's one to watch. Are we very bullish on Arweave long term? Filecoin is better, but Filecoin tokenomics are not good. Arweave has better tokenomics. They have over 90% of tokens in the market already, so very little inflation. All right, let's find some questions here. I'm seeing a lot of people talking about Hivemapper. Okay, did something happen here? Let me take a look and see what's going on with Hivemapper. All right, here we go. Hivemapper. Yeah, nothing has changed. Nothing has changed. I said this is better at, because FTV is 378. Okay, FTV is down 50%, but my target FTV is under 50 million. So it is not there yet, folks. We need this to crash some more. They had some horrible tokenomics early on. Not too liquid either. But if we go down here, yes, down almost 50% in 2 weeks. We need this down like 97% from all-time high. Right now, it's only down 57%. So we need this down 98% from all-time high. So 0.003. I think 0.004 is a target price. So this it's not there yet. But let's go back to questions real quick. Tokenomics of Matic. I mean, I'll just go to Tokenomics and look at the investor grades. Canto's coming down. Yes, it is. Let's see here. Yeah, there is also Signature Bank. I mean, hoping Signature Bank is not next. Because that's the only crypto bank left for people in crypto. I mean, we actually use that bank. We use it for Tokenmetrics Ventures. Right? And the funny thing is, we're talking to Silicon Valley Bank this week to onboard for Tokenmetrics, the company itself. But obviously, those conversations are now done, right? But because SVB Bank was crypto friendly, Silvergate Bank was crypto friendly, but they had a huge backlog of companies wanting to onboard. So Signature Bank was actually the better company to go with if you wanted to onboard fast. But now they're the only crypto-friendly bank out there. I mean, well, not crypto only, but I would say they're the big one, right? They're publicly traded. Like, so was Silvergate and so is Silicon Valley Bank. There's one other bank, FB Bank in Puerto Rico. I know they've been used by other companies like Polygon and others. Now, I'm not sure if they'll have to step in, but we need a banking company. Crypto companies that actually have operations that need to use fiat to pay staff, they need a crypto bank. So if we only have one bank left and they go under, it's not looking good. I mean, we're going back to the Stone Age days, honestly. Right, let's. Ahmed says Americans just leave to Dubai. Honestly, I did think about that a while back. Last cycle, I thought about going to Dubai, but honestly, it doesn't really help if you're American, because not a tax professional. Consult your American CPA for this, but my understanding is Americans overseas, only the first 100K is tax-free. Anything more than that, you still have to pay taxes on that, unless you renounce being an American, which I actually thought about, but I did not want to do long term. Sometimes it's good to have an American passport, but I did think about different options. And it's something lots of my friends have done, other crypto investors. I know crypto investors who have multiple passports. I think one of the founders of Facebook actually did that. He renounced being an American to avoid paying billions in taxes, and I think he moved to Singapore, basically. But I mean, it's crazy what people have to deal with sometimes, right? Let's see here. Are you still bullish on Solo Network? Yes, I mean, but entry price matters, right? So I would leverage our platform, Tokenmetrics, in the free trial to know when to get in with investor grade and when to get out, and to also know when to trade using the trader grade. Will XRP being cleared by SEC be a catalyst for the next bull run? Yes, it will. I mean, I am on Team XRP. Obviously, you guys know how I'm doing with my lawsuit, but I'm saying if XRP can give the SEC an L, oh man, it will be heaven on earth for crypto. Because at that point, we have the blueprint. Because somebody needs to challenge the SEC and get them to just back off crypto. These regulators are just causing innovation to stall. So if they can be checked, that will be a beautiful moment for all of crypto. So in my opinion, I think that will be a huge catalyst. Because now we'll have actual precedent in court. And now they would have to actually defend themselves. Aside from Bitcoin and Ethereum, what top 5 coins are you bullish on? The top 5 coins, I mean, I would just use the platform, but just me personally, not looking at price because the entry point does matter. So obviously use the platform to figure out when to get in, but coins that we currently like, I would say Stellar is undervalued as a cross-chain narrative play. I would say Injective as a Cosmos ecosystem play for DeFi. Solana, I mentioned that as an L1 play that I think is undervalued, but has had a good past that I think could bounce back. If I had to pick 2 more, Polygon, I think Polygon is the next Ethereum. So I think Polygon and LVL, but I'll pick one of those. So let's say you still want to be part of the Ethereum ecosystem, but Ethereum is too high of a FTV. It's a large cap. It's number 2 in FTV in market cap. But you want to have exposure to the Ethereum ecosystem. There's something that can potentially outperform Ethereum. What would you go with, right? So this is where I kind of veer off the beaten path. So let me actually pull up these projects, right? So let's use our platform to pull up Polygon. And let us also pull up LDL. Right? And this is how I think as an investor, right? So investor grade is 76, is coming down. Obviously, not really a good time to enter at this moment. But if the metric I like to look at is correlation, right? So correlation is a metric that goes from -1 to +1, right? With 0 being that it's not correlated at all. But if it's -1, it's negatively correlated, meaning that if ETH goes up, Polygon will go down. But if you see here, Polygon and Ethereum have a 0.9 correlation with each other, meaning that pretty much they move the same. If ETH goes up, Polygon goes up. If ETH goes down, Polygon goes down. So basically holding Polygon and ETH is basically holding the same thing. But Polygon obviously has a lower FTV than Ethereum, right? 10 billion versus ETH, right? ETH is what, 200 billion FTV or market cap? Now it's a lot lower. And then same thing with LDL. Actually, LDL has a good investor grade, so now's a pretty good time to be an LDL at this price point. LDL has a correlation with ETH of 0.74, so also pretty high. But also, actually, it's highly correlated with Aptos and Optimism. I'm surprised it has higher correlation with Aptos than ETH. That's a surprise, honestly. Now, but basically, coming back here, ETH FTV, okay, it's down a lot, 170 billion. So basically, if you have ETH and Polygon in your portfolio, you're basically holding the same thing. So you can find 170 billion FTV versus Polygon's 10 billion FTV. I'd rather have Polygon because I think Polygon next cycle is going to do well. They have a great biz dev team, especially the next Ethereum. So it's basically holding Ethereum at a lower FTV. So if Polygon can move a lot faster than ETH. So to me, that's the play, right? Basically, I would sell. I know very controversial. I would sell my ETH, buy Polygon, because they're basically moving the same, and it has a lower FTV. And then you can diversify by getting something else that's uncorrelated, such as Solana. But that's kind of the way I view this. So those are my top 5 coins right now, not financial advice. What's your opinion on Cardano? We did a code review on this. Good tech, just not much adoption at the moment, but good tech, solid, scored over 80%. Why did you say Olympus is a Ponzi? I mean, the proof is in the pudding. Just look at what happened last cycle. I mean, technology is good, but I'm saying in terms of the tokenomics, that was not sustainable, right? Just the, the, the data proves itself. Right? If you just go look at what happened, right, with how famous it got and how it came down crashing, the proof is in the pudding. BK Crypto says XRP test should replace Howey test. Yeah, I mean, if they can win, that'll be huge for crypto. Could you please explain how to read Sortino? Like Solana has 528,036 or 520. Yes, so Sortino ratio. Let's actually do Sol, right? So Solana. For those who don't know, basically, in terms of investing, you have different metrics that help you measure the risk to reward and performance of a investment, right? So the, the main one is Sharpe ratio, right? So just a quick definition here. And then we got Sortino ratio, which is my favorite personally because of crypto. People have different preferences. But let me just kind of bring them up here. If we use Investopedia, now basically Sharpe ratio is a measure of an investment's risk-adjusted performance calculated by comparing its return to that of a risk-free asset. Typically, is whatever risk-free asset typically is like, let's say yields, treasury yields, right? Like let's say the 10-year treasury yield gives you like what 4% interest, right? So meaning that if your cash is just in treasury bills or the bank, hopefully not because banks are going belly under, you'll be earning let's say 4% yield. So whatever investment gives you, you want to outperform that yield. Otherwise, it makes no sense, right? You want to get adequately compensated for the risk you're taking. So a Sharpe ratio measures that, right? So let me see if this is kind of the formula, right? Basically, you have the return of your portfolio minus the risk-free rate divided by the standard deviation of the portfolio's excess return. You don't have to kind of recap with the math. It basically tells you whether or not you're being adequately compensated for the risk you're taking. Right? The higher the Sharpe ratio, the better the performance, right? So typically, like a good Sharpe ratio is like 1. A great one is like 2. Actually, let me see if they have that here. Then you have Sortino ratio, which is also kind of derived like the Sharpe ratio, except if I read it here, right? The Sortino ratio is a variation of the Sharpe ratio that differentiates harmful volatility from total overall volatility, right? What does that mean? Basically, downside deviation, right? So with Sortino ratio, they're not penalizing upward volatility. It only penalizes kind of basically negative portfolio returns. So if we come here, just one minute. Yeah, so basically it's only looking at the downside because in crypto we have lots of tokens and crypto assets that go up, right? With your standard Sharpe ratio, it will penalize the volatility of going up, which makes no sense, right? Because if it does 100x very quickly, that's good volatility. So Tina only looks at negative downside, basically only taking losses. So for me, kind of the same thing. I look for projects that have a Sortino ratio over 2 because that is great. That is fantastic. So if we go to Solana and go to the trader grade here, so the process, anybody can try this on our platform. Recommend you sign up if you haven't signed up yet, become a customer, tokenmetrics.com. And basically, I look for a high trader grade, preferably over 80%. That's the first point of confluence. Then I look for a bullish signal, this green line here. Right now, we're in a bearish territory, so right now I would not be trading this, right? But a bullish signal, that's a second point of confluence. And the third is there any alpha in this signal? And obviously, this signal has a lot of alpha, right? So while following this signal, you would have made 11 million%. Is this right? Yeah. Basically, Solana did very, very well, right? So we compare this trading strategy versus just holding SOL. And the time frame we're looking at, if we go to the max history we have here. Just give me 1 second. So basically, this is looking at what initial token price of 0.03 cents, going to an all-time high of almost 260, and all-time low is 50 cents, I believe. But basically, if you follow this signal, you would have made a lot of money, right? Obviously, Solana did very, very well last cycle. It made a killing, but you would have made even more money with this. So this would have had a very high certain ratio. So basically, just with 10 trades, right, your max drawdown versus holding would only be 73% versus 96%. Now, one thing to note, the accuracy does not matter. This is something I think people kind of forget, because the cost of being wrong is not bad if you can quickly fix being wrong. What matters is actually making money, right? So for me, I look at Serpina ratio, and obviously this has done very, very well versus holding. And those are the 3 points of confluence I look for. All right, let's go back to Polkadot was cleared from being a security, if I'm not mistaken. I'm bullish on that. I heard about that, but I'm not sure how plausible that is. But I mean, I think it was the U.S. regulator. If it is, I mean, that's great news. Technology is great for Polkadot, very good. I believe over 94% of tokens are in the market, so very low inflation in the future. But the main challenge with Polkadot is parachains. Very expensive for projects to afford a parachain. That's why I think Cosmo has done very well. Cosmo ecosystem has done very, very well. It's a lot more developer friendly for new projects. All right, what's the next Matic project? Well, I would say that's why you got to join tokenmetrics.com. But jokes aside, if I had to say what is the next Matic, it's tough, because I feel like lots of projects. Matic was special because they launched with a very low FTV, and they launched as a Binance Launchpad project, Binance IEO. Nowadays, great projects like all the new Matics. Like let's take the ZK-Ware projects, right? They're launching with a huge FTV, right? Optimism, Arbitrum, all this. Like let's say Arbitrum, right? If Arbitrum is the next Matic, when it launches and if they issue a token and it begins trading, it won't be like 20 million FTV. It's going to be like 20 billion. So the money is basically in the airdrop, not so much in buying it. Very rare do you find a project on exchanges at a very low FTV. Like that is a steal. So we're always putting out different code reviews. So stay tuned. We have some code reviews coming out to our customers. We have some L1s. There's some projects we like from ETH Denver. I was there last week. But I think it's tough now. Nowadays it's mainly airdrops. Let's see here. Technology says Tokenmetrics platform is my favorite tool. Thank you, appreciate that. I mean, we have some great stuff in the works. We're hoping next quarter to be able to launch our own version of ChatGPT for crypto. Yes, ChatGPT for crypto using our own data. So basically, there will be a chat interface. You just talk to it, kind of like this AMA. Imagine having myself or our team, but through an AI, right? Using ChatGPT's API and our ratings and signals, being able to ask it any question and get an answer. I mean, that's the future and power of AI. So our team is working hard on this to have an alpha version of this for our customers next quarter. I highly encourage if you want to be a part of this alpha test, become a customer. Tell us what you think, but I think we'll be cool being able to just type any question. Like all these AMA questions could literally be done by the AI. So in a way, I'm trying to automate myself. But hopefully you guys would like that. So stay tuned. Very, very exciting stuff. I need to start making more videos with my token metrics access. Yes, I mean, definitely encourage you to do. We do have an affiliate program as well. I believe if you go to, is it partners.tokenmetrics.com? Let me just see if I can pull that up. Yeah, partners.tokenmetrics.com is the affiliate page, or just Google Tokenmetrics affiliates. We're paying out, I believe, 20%, is it 20% or 40%? But basically, we're paying out a lot of commission to anybody you refer to Tokenmetrics. So we have people that create content, whether on YouTube, as a podcast or as a blog. Uh, and last cycle, lots of people made six figures through our affiliate program. So I highly encourage you to check it out. And we're also going to be adding our data API to the affiliate program. And once we launch our crypto chatbot, the GPT-3 for crypto, that would also be part of the affiliate program. So if you want to be a part of that, I highly encourage you join now. And that says the next hot narrative always comes unexpected. I mean, sometime we predict some narrative to pump next, then all of a sudden a different narrative that we didn't see coming pop in and steal the show. Yeah, I mean that's very true. But we can always like the big narratives for this year were liquid staking tokens, basically Rocket Pool, Lido, and others. Then we had the AI narrative because of OpenAI. But I think AI narrative is not going to go away anytime soon. When GPT-4 comes out, like we know, we've seen what's happened with GPT-3. GPT-4, I feel like the world's going to be turned upside down. So I think people will see the huge power of AI again and FOMO again into AI tokens. But also depends on how bearish the market is, right? If regulation and all these banks are going under, it gets even worse. Maybe people will still be on the sidelines. But I think definitely worth keeping an eye on that. What chat am I reading? I'm reading the chat on YouTube. Follow us on Tokenmetrics. Just go to youtube.com/Tokenmetrics, I believe is the link. But this is also streaming to my personal YouTube, which I don't really use too much, and also Twitter. Ian, buy Utes NFT and DeGods. Bro, join us. I mean, Utes has done a pretty good job in terms of growing the ecosystem, right? Switching from Solana to Polygon with their grant. But I like what they've been doing. They've been very, very innovative, and it has been on our watch list on the fund side. But I've been so busy with other stuff, I haven't had a chance to really do my research and potentially invest in it. What do you think about my top 10? Arweave, Ethereum, Matic, Optimism, Sand, AVAX, Render, Sol, Near? Now, decent projects from a fundamental and technology perspective. I can tell you what to do, but from my perspective, what I would do. If I had Arweave, I like Arweave long term, good tech, solid tech. FTB is much cheaper versus Filecoin, so I think it's undervalued relative to Filecoin. So I think there's often that long term. Ethereum, honestly, I think I would only have ETH for gas fees, as mentioned before. You can get the same. You have. I would not have ETH and Matic because both of them are highly correlated with each other. Holding ETH and Matic is basically holding the same thing. I mean, Matic is basically part of the Ethereum ecosystem. So Matic has a cheaper FTV. It's basically Matic is a tenth cheaper or more than Ethereum, but moves just like ETH. So I would only have Matic. I would not have ETH. Optimism I like, but tokenomics are not good long term. I would only trade it. I would not have it long term, but I do like the OP stack. Sandbox is good, market leader, but what's upside from there? AVAX, I do have Avalanche or AVAX, and I'm staking it, but I think having AVAX and LP in the same portfolio kind of, I mean, if it's an airdrop, maybe that's fine, but I would have AVAX or so, and you have both. Render is good. FFTV is kind of high. It is a good metaverse play. Near is great tech, but hasn't really done well. Actually sold it trading wise, what, a week, 1 or 2 weeks ago. Hasn't really done well. Um, so yeah, that's kind of what I think of that portfolio if I had it. I can tell you what to do. I said seller, S-E-L, I'm sorry, C-E-L, sorry, C-E-L-E-R. Say that twice, huh? Are you concerned about the Solana outages now? Not so much. I mean, it happens, but I mean, it still did very well last cycle. But now, if it keeps going lower, it becomes cheaper. So they still have a huge war chest, and I think the Solana phone is something people have to watch. I mean, that I don't know what other blockchains do on that. Like that could be a 0 to 1 play. Let's see here. What about the third trading view indicator? Will it be public soon? It is. It's public now. If you go to TradingView, like, so anybody can use this. If you're a customer, you can use this. Just go to your settings, here, settings, then configure that. It will invite you to TradingView, and you can add the indicator. Do I have it here? Indicators. So it'll be invite only, and it's going to be this token metrics indicator. Right? And basically it tells you when to go long and short, right? So green is bullish, red is bearish, right? The arrows here. So let me actually configure this. So yeah, long term, because this is 1 day. I want to do 100% with one in terms of orders. So let's say we were trading ETH with this. I don't need all this other stuff. Where's the sitting? Okay, so this was only 1 hour. I need to be on the daily. All right, there we go. So actually interesting. So it was bullish. Yeah, it turned, you see this? So it crossed this line here, a huge drop, and it said close long. So trading indicator says get out of Ethereum. If you're trading ETH right now, kind of get out. If we go to BTC, let's do BTC. Let's use Coinbase. The same thing, get out of BTC. I mean, so right now is not a time to be in the market. So trading the indicator, encourage you guys to check it out. You can learn more by just going to tokenmetrics.com and see all the different products we have. Right, so you come here, you got the platform, you got TradingView indicator, or the data API. But let's say you want to learn more about the TradingView indicator, you can buy this standalone by itself if you want to, or if you're a customer, you get this as part of the platform, right? But basically, like if you go to pricing here, right? Yeah, TradingView indicator is on all plans, right? So 20 bucks a month, you get basic, you get this plus our ratings plus everything else, right? Or you can just buy it by itself, or just buy an Astrobot and you get that as well. If you want to pay with NFTs. But looking at this, I mean, it is not looking good, right? Basically saying if you're long Bitcoin, this is over. Time to get out. Same thing with ETH. How would you weight your portfolio? Have like 70% in ETH? No, I mean, there's no reason to be holding ETH right now. You just saw the trade, right? According to this, if we go back to, maybe not that. Basically, there's no reason to be holding ETH. See, we have that. We have also Tokenmetrics itself. Basically, I mean, nobody's going to get rich holding Ethereum. I know it sounds tough to say, but ETH is the new Bitcoin. Plus, with all the regulation stuff, it's still on work. I mean, if you want exposure to Ethereum, you can get it through Polygon. That's a lot cheaper. Polygon is the next ETH, especially with the ZK coming up with the Hermes, the ZK Relic. Right? So holding Polygon is just like holding Ethereum at a cheaper valuation. Now I'm looking at this right now is not the time to be in Ethereum. If you see this, this is there since March 3rd. Right now, sidelines. Like on the fund side, we have sold all our ETH in cash, stablecoins. Holding ETH does not make any sense right now. Let me see here. All right, Ian, with centralized exchanges having a hard time with regulators, do you think Uniswap and 1H tokens will take advantage of this and pump? I don't think so. The tokens are mainly governance tokens, not much utility. So I don't think that's going to happen anytime soon, honestly. I only see the two old indicators in my scripts. Yeah, you have to redo it the old scripts are old. You have to erase those and just redo adding your trading indicator, and it will re-invite you. If you have any issues, just reach out to support@tokenmetrics.com. Now, do you think Helium makes it back to all-time high? That's a 25x. I mean, anything is possible. I think they have a lot of money. They've raised a lot of money, so they can survive the bear market. I think them switching over to Solana's ecosystem is interesting. That can maybe give them better liquidity, more exchange listings, better support, and focus on building the tech, not so much the blockchain. Is that an Oura ring you're sporting? Yes, it is. I do like my Oura rings. But fitness and sleep is key. Highly encourage that. All right. So, what other questions do you guys have? We've kind of covered a lot. Let me see if there's any other news that has come out while we've been on the stream. Um, Let me see here. I don't think there's any news, any new news, at least. Oh, okay, maybe we do have news. Oh man, okay, hold up. So yeah, this is from Watch Your Guru, a good Twitter for crypto news. Almost 2 million followers. They're basically just in Circle USDC held an undisclosed amount of cash in Silicon Valley Bank. I mean, let's zoom in on this. Right, so it says Circle notes USDC reserve report. Amounts are shown here at their fair value as of the report dates. The Circle Reserve Fund, in which these securities are owned, reports U.S. Treasury securities in accordance with Rule 2A-7 under the Investment Company Act of 1940 as amended. Now, 2. Cash held at U.S. regulated financial institutions, Bank of New York Mellon, Citizens Trust Bank, Customers Bank, New York Community Bank, a division of Flagstar Bank, North America, Signature Bank, Silicon Valley Bank, and Silvergate Bank. So two of the banks that went under, Circle has deposits there. And as you know, only 250K is insured by FDIC. So I hope they had insurance on this. Let's see what the next point says. Fund and bunk balances have been adjusted for timing and settlement differences, which include deposits, withdrawals occurring after the bank statement cutoff time, but before the report dates, blah, blah, blah. I mean, holy cow. Our funds snafu? This is, I mean, what a time to be in crypto. This is crazy. Uh, this was March 2nd. Now, let me check the chat, the comments here. I mean, is this what the government wants to happen? To kill stablecoins and issue their own stablecoin? I mean, it's not looking good. Tell me what you guys think about this. I mean, let me see if there's any other news regarding this. This, depending on the amount, this could be huge. Like if Circle USDC goes under, holy cow. Yeah, Chris Black says, hi Circle, I think that this is the part where you need to tell us what percent of your cash reserves are held at the now failed SVB and whether or not USDC is still sufficiently collateralized at this moment. Yeah, I mean, definitely. Yeah, so 26.4% of USD reserves have exposure to US banks. So about a quarter. Okay, I'm seeing reserves composition here. Okay, yeah, because the rest are short dated US Treasury portfolio. So about a quarter is cash reserves. I mean, it's not looking too good, guys. Kind of be on the sidelines. I mean, not not the time to be risking your capital. Let me check the chat here. Uh, how would you weight big caps versus small cap notes? 50-50? And right now, I'm on the sidelines, guys. Yeah. But in terms of weight, we've been backtesting different ways to see how we can optimize the indices. And what actually has been performing well has been to take the top TM grades, let's say like the top six, top five, top six TM grades, and weighting it based on the inverse of daily trading volume. So, for example, take the top five grades and the ones that have the lowest trading volume. Now, assuming there's a minimum requirement of, let's say, like 500,000 trading volume across all these, right? So, you go to the platform, add trading volume filter, and then weighting it based on that. So that's kind of how we've been backtesting that. And in the backtest, that's actually performed better. The inverse, so basically the highest trading volume gets the least, and the lowest trading volume gets the most. So giving more exposure to momentum plays. And we'll have more once we update the indices this month, because we're looking for us to make it better, especially in times like this. But in our backtest, that's actually been performing pretty well. If USDC goes bye-bye, then Coinbase is doomed, right? Coinbase and Circle. Circle is the coot. I mean, honestly, I have other ways to make money, but yeah, it's gonna be rough. You know, at that point, Tether is next. I mean, Tether has dodged so many bullets, but if Circle, the regulated entity, goes down, and Coinbase with USDC, I mean, Tether might be next. Did you know Silvergate, with its crypto SCN network, was about to issue its own stablecoin? That's why the real reason they went under. Top dogs didn't like that. Okay, I mean, that makes sense. I mean, regulators are fighting stablecoins, it looks like. I mean, Facebook Libra had their issues and challenges, so I definitely could see that being a possibility. All right, well, we're at top of the hour. Answered all the questions. Hope you guys are staying safe out there. I hope you're on the sidelines. Definitely make sure you're leveraging our free market indicator, right? By going to app.tokenmetrics.com/market and let's just wait it out. Let's wait and see till the market goes bullish. But right now, we're on the sidelines. Cash is king. Preservation of capital is crucial and vital at times like this. With that being said, thank you everybody. Have a good weekend. And as we like to say, the moon is not the limit to the moon and beyond. Thank you. Have a good weekend.